56% of all corporate Bitcoin buys happen in the last few months. I just can't see the stair-step up. The thing that's most likely to happen is what inflicts the most pain on the most number of people. We're reaching corporate FOMO, we're going to get nation-state FOMO, and then retail FOMO. And all of that's going to mean a very steep adoption curve. I think we hit hyperbitcoinization somewhere at 0.5 million a coin, and we start devaluing gold and demonetizing gold and real estate, which are both massive chunks of the global wealth.
Samson Mow argues that the market is on the precipice of a rapid repricing for Bitcoin. He contends that the perfect storm is brewing. Years of unprecedented money printing are converging with the complete removal of institutional onboarding bottlenecks via the spot ETFs. With corporations and nation-states now lining up to accumulate, Mow believes that even without recent fiscally expansive legislation, a price explosion was inevitable. These new bills simply guarantee and accelerate the liftoff of the Bitcoin rocket, setting the stage for a move that will be anything but gradual.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
People are seeking to protect themselves and protect their savings. And they're just looking for a dollar, a digital dollar, and they don't really care what it is. If it is on a blockchain, that's great, but they need to be able to access it. And much of LATAM can't access dollars. There's not enough physical cash supply, and the banks, obviously are a bottleneck too, because they cannot bank everybody. That's why we have a few billion people in the world unbanked. So Tether USDT is like a godsend for people in LATAM that are seeing their savings eroded. So they naturally just seek it out and they start using it. And unfortunately, the bulk of it is on altcoin chains. I think the rapid repricing is just waiting right now to happen. You have the ETFs, which eliminate all the barriers to Bitcoin acquisition. In previous cycles, you always had a bottleneck with exchanges onboarding people and companies, right? They would just get bottlenecked for months. But with ETFs, that bottleneck is gone. It's just money will flow in anytime. It's like a portal to TradFi money. And then you have the demand from all the corporations. You have nation states starting to line up and go through their own processes to allow for accumulation. So all of that combined with the current financial system and all of the money printing from past decades, more pertinently probably from the last 5 years, is all coming to a head. So even without the big beautiful bill, Bitcoin will explode to the upside. But the big beautiful bill just guarantees it, in fact. So nothing really stops the train, in the words of Lynn Alden. So yeah, I think the big beautiful bill should open some more eyes and accelerate the takeoff or the liftoff of the Bitcoin rocket. Because if you look at what Ray Dalio is posting, 7 trillion a year translates to about 64 million BTC. So 3-ish Bitcoin networks are going to be spent per year. So you can kind of figure out and reason out that Bitcoin is cheap right now at $110,000-ish a coin. 56% of all corporate Bitcoin buys happen in the last few months. So that's not an indication that we're going to stair-step up. And if you look at a strategy alone, their acquisition is accelerating. So I just can't see the stair-step up. Stair-step up is a graceful ascent, and it violates the principle of Max Payne Theory, which is the thing that's most likely to happen is what inflicts the most pain on the most number of people. And that is that everyone misses the boat because they weren't paying attention, or they thought Bitcoin was expensive, or they just thought Bitcoin is going to go away. So stair-step up means everyone has time to learn. They're going to watch as it goes up, a little bit every day, gradually for the next 21 years. And that's just unlikely in my book. It seems like we're reaching corporate FOMO, we're going to get nation-state FOMO, and then retail FOMO. And all of that's going to mean a very steep adoption curve. I think we hit hyperbitcoinization somewhere at 0.5 million a coin, and we start devaluing gold and demonetizing gold and real estate, which are both massive chunks of the global wealth. And Bitcoin goes up very quickly to 1 million, 2, 3. And at that point, nobody will take dollars for payment. So you won't be able to buy a TV or a car with fiat money. They'll say, oh, we want Bitcoin. And what it looks like for the average person is that they'll just be paid in sats. So you'll be earning 20 sats an hour for minimum wage or something like that. I think right now America should buy Bitcoin because it's almost on sale. Like anything under 0.5 million a coin, I would say is a good deal. And I'm just in disbelief that we're still at these prices now, given the amount of just incredible accumulation from all the corporate Bitcoin treasury companies, as well as the telegraphing of plans from nation states to buy. So, if I was the US, I would buy now, especially given the big, beautiful bill passing, and that's just going to increase the debt and deficit.
The core of Mow's analytical framework is his rejection of a stair-step rally in favor of his Max Payne Theory. A slow, graceful ascent, he argues, would allow everyone time to learn and invest, which is simply not how markets work. The Max Payne scenario, the outcome that inflicts the most pain on the most people, is a sudden, violent upward explosion that leaves the unprepared and the unbelieving permanently behind. He foresees waves of FOMO, first from corporations, then nation-states, and finally retail, creating a steep, parabolic adoption curve. He identifies a hyperbitcoinization threshold around $500,000 per coin, where the demonetization of gold and real estate will begin, triggering an even faster ascent to multi-million-dollar valuations.
If you look at gold, people were spending gold in history. They would spend it as gold coins and buy shoes with it or bread with it, or like lower derivatives of gold like silver and copper, right? But the main point is you would transact it and spend it, but at the same time, people do hoard it as well. And I think the difference is a bit more pronounced with Bitcoin because it's underpinning much of the financial system now because it has to. Institutions, governments, corporations, they're all looking for a pristine asset that's not going to degrade and devalue over time. So that's why companies like Strategy and others are adding it to their balance sheet, and governments too. But at the same time, you have the rest of the world, which needs money. They need liquid money that can be spent to pay their suppliers, to pay vendors, to move around quickly, in addition to stablecoins too. But they're looking for something to use as money. So both sides are actively pushing both use cases, the medium of exchange and the store of value use case. So I think you'll see it end equilibrium where it does turn out to be both, and it is really good at being both things, and is not necessarily one or the other. And even if BlackRock and Strategy and others have a large holding of Bitcoin, you're always going to have Bitcoin in the wild and being used by ordinary people to spend and use in their daily life. I think there's probably some dimension of paper Bitcoin involved. There could be something shady happening. We just don't know. And it's the same as in the FTX case where we found out after the fact that they were selling Bitcoin that they didn't have. So it's possible, like some exchange and in some, the lesser known exchange is selling paper Bitcoin. And for some reason, there is not a run on that exchange yet. And that could contribute to this. The other theory is that it's simply OGs selling, but I don't know of any OGs that are selling, so it's difficult to really understand exactly what is going on. But I wouldn't rule out the possibility that there is some outright fraud and some exchanges taking advantage of this selling Bitcoin that does not exist.
Ultimately, Mao's vision sees Bitcoin fulfilling a dual mandate as both the world's pristine store of value and a liquid medium of exchange, simultaneously. Institutions and governments will hoard it as a reserve asset, while individuals in the developing world will use it as a transactional currency to escape failing fiat systems. This leaves a critical question. Why, with such overwhelming demand, is the price still so low? Mow is in disbelief, and he speculates that the only logical explanation is the existence of paper Bitcoin, outright fraud on certain exchanges selling Bitcoin they don't possess, artificially suppressing the price, much like the FTX scandal. This adds a final explosive element to his thesis, suggesting a day of reckoning is coming.